Good afternoon. This is Sean Golding with Golding & Golding, here to discuss the basics of foreign life insurance policy taxation and the IRS and whether the policies are taxable. Foreign life insurance policies are unnecessarily complicated. No one really thinks of their foreign life insurance policy as an account per se, but guess what the IRS does, right? It's an account for FBAR purposes. It's an asset for FATCA Form 8938 purposes. Outside of the United States, life insurance policies are very common investments. In Singapore, AIA, in India, LIC or Prudential, the UK has the Friends and Aviva policies, Hong Kong has AXA. These are very common. These policies are ordinarily purchased with the beneficiary or based on the life expectancy of the child, and they generally grow tax-free overseas. When it comes to foreign life insurance policy taxation, there are various types of income to consider. There's dividends, capital gains, there's bonus, and then there's something called excise tax. So dividends, capital gains, and bonus are taxable. Excise tax is a Form 720. That is a tax that is paid. It's a 1% tax on the foreign premiums paid. It normally doesn't come out to too much. If you pay $1,000 in premiums, it's taxes 1%. One common complexity with foreign life insurance policies is the growth versus distributions. So generally, let's start with distributions. Distributions are going to be taxable, right? Let's say you have a foreign life insurance policy, distributes $2,000 of dividends. That's passive income that's going to be taxed in the U.S. If you have a foreign tax credit, you can, of course, try to apply it to bring your tax liability down. Accrued growth is also taxable, but there are some distinctions. So if just the value of the policy goes up because some of the assets that were purchased gained popularity, but no income is being withheld or growing inside the investment, generally that's not a taxable event, so that's not going to be taxed. That just increase in value. But if it's because there is money, dividends, and whatnot that's accruing within the policy, then there is the potential that it is taxable. It's something that you should discuss with your tax professional practitioner, but there is the potential for that. And one more layer of complexity is that even if it is taxable, if it turns out that it's a PFIC issue, passive foreign investment company, then it may not be taxable now, but it may be taxable later, depending on what type of funds or investments that the policy holds. What happens when you're out of compliance in prior years? Well, generally what you do is one of the offshore voluntary disclosure programs. There are several of them. There used to be something called OVDP. They terminated that at the close of 2018 in September 28th, I believe. And then they went ahead and they expanded the voluntary disclosure program that's been around forever in early 2019. So these days, if either you're willful or you can't certify that you're non-willful under penalty of perjury, then you would pick excuse me, the traditional voluntary disclosure route. Some other people refer to it as new OVDP as well. There's something called the Streamlined Domestic Offshore Procedures for non-foreign residents, Streamlined Foreign Offshore Procedures for foreign residents. These are streamlined versions of the traditional voluntary disclosure program with a shorter compliance period. Streamlined Domestic only carries a 5% penalty. Streamlined Foreign is a complete penalty waiver. There are some alternatives to the streamlined programs. There's the delinquency procedures, delinquent international information return submission procedures, in which the IRS will generally waive all penalties. It typically requires no unreported income. And then there's also reasonable cause if you don't qualify or you want an alternative to some of these other programs. We have lots of information on our main website, goldinglawyers.com. We also have a sister website, IRSstreamlinedprocedures.com, for issues involving the Streamlined program. Again, my name is Sean Golding with Golding & Golding. Thank you for your time.